Hello everyone, Alice here from Sophie Financial Network. In this video, I just want to talk about a couple of indicators that I'm using for the sentiment, for the market sentiment, specifically for S&P 500. So lots of folks or lots of people are talking about the reversal just based on the sentiment, but how that sentiment forms in the stock market. So this is a PCC chart, which is a put-call ratio. And what is put-call ratio? Put-call ratio means the amount of options that put options. And basically, put option means when you are shorting the market, when you are expecting something bad is coming up shortly. And when you think that market is going down, you are buying put option. Basically, you are shorting the market via option, and that calls put option. On the other side, there is another option, which is call option, and that call option means you are bullish. You are betting on the market for going higher. So this is kind of like a contrary indicator. It means when everyone is bearish, market is close to reversal point, and when everyone is bullish, market is close to the reversal point to the downside. But this doesn't happen regularly. This doesn't happen usually. If you just rely on the sentiment, you will be toasted and roasted, as everyone is just relying. And for those ones who are relying for the sentiment and they think, oh, this is the most bearish sentiment that I've ever seen, and market is pretty close for the sharp spike to the upside, but next week or next day they will see market is coming down and down and down, just because they don't combine these elements with price actions, with fundamentals, with cycles, with everything that we are covering in this channel. But in this video specifically, I just want to talk about the cycle. So this is put call ratio, and whenever we are getting above this extreme, like I just pointed myself these two green lines, and whenever we are getting to these area is very, very important for the reversal, because people are betting against the market. So when this blue line is spiking up, it means a put call option and put options, the number of put options are extremely over to call options. Basically means people are shorting the market. People are shorting the market, and people are shorting the market, and so on. And when this line is getting to the red area, this means people are betting on the bull side of the market. Means they are bullish, they are extremely bullish. And when market is in trend for the upside, whenever we are getting to this area, this is fantastic signal for the market to buy, because just imagine we are in uptrend and price is going up, coming down, going up, coming down, and when we are down, people are bearish. And when this line is spiking up within an uptrend, that would be great buying opportunity. On the other side, when we are coming down in a trend, which we are doing right now, whenever we hit this line, oversold condition, which is people are bullish, this is a fantastic opportunity for shorting the market. However, we are in uptrend or we are in downtrend, basically. So if you look at the S&P 500, we are in downtrend. We are in a clear downtrend. So you see high, low, lower high, lower low, lower high, and this is just we are here. So we are not getting to the lower low. But look where is the sentiment, or where is the PCC? The PCC, or put call ratio, is spiking up, which is pretty close to the bottom. So the last time when we were there, so look at the line. We are in extreme bearish sentiment, and look what happened to the market, and we are getting close to that one again. So price is coming down almost close to the double bottom, and look where the sentiment is. So this is in 2020 when COVID crash happened. Just look at that. So S&P 500 chart, which is this orange line, is coming all the way down to here. all the way down to here, and look what happened. So lots of people are getting bearish at the bottom, and lots of people again getting bearish at the bottom here. So here is the bearish sentiment, and here is the bottom. Here's the bearish sentiment, here's the bottom. Is it the case every single time? I would say no. Just look at that. So here, if you're just going back all the way back to here, just want to show you something pretty interesting. So this is the amount of bearish. You see this one is pretty, oh my god, this is extreme. And this extreme is there, so market is there, but this is kind of like the most bearish sentiment in the history of S&P. But here is the 2008. So if I just zoom back here, just want to show you interesting thing. So the number of time that we are getting to the bullish side, or we are getting to the bearish side. So this is pretty interesting. When price is coming down, institutions are getting call option, are getting into call option. Look at that. So the sentiment is getting bullish. But when we were up there, sentiment is getting bearish. So this is the way that I'm looking at this indicator. So when we are in a clear downtrend, when we are getting to overbought condition in PCC, which is the most bearish sentiment, this is a pretty clear setup for the short. So here is the short. Here's the short, just because we are at top of the price, coming along with this. But when we are getting to down, like a price is getting down, and look at that. So people are getting start buying the market, just because this is getting to the call. Call is getting more than put options, right? So this is fantastic. And if we are just getting moving forward to today's market, so as I said, we are in a clear downtrend. We are not in uptrend at all. So we are in a clear downtrend. So whenever we get there, and probably we are due for a bounce, and we are due for a bounce. And this bounce, if this indicator coming down there to the short side, which is 0.7 to 0.75, that would be fantastic opportunity for short again. So if you're all looking for the short, I explained how based on the price action, where and how we're going to short the market. If you didn't look at my previous video, just at the end of this video, it's going to be the link for that video. So make sure to watch the weekly analysis for S&P. So this is one of the indicator that I'm showing you. The other one is, so this is fear and greed indicator based on CNN. This is very, very normal general indicator. And you see, we are at extreme fear. Like everyone is getting bearish. So we are at the down side of the market and everyone is getting bearish. When we are getting to the extreme fear, so it's we are getting close to the bottom. But this bottom could be, I don't know, a week or 2 weeks or 3 weeks now, but we are close. It doesn't say specifically we are at the bottom, price action tells us, but this sentiment is signaling, hey, we are due for a bounce. I would say we are due for a bounce, and then we should look at this gauge. If this gauge is getting to greed or extreme greed here, that would be great signal for shorting the market. The next one is AAII sentiment survey. So this is the most bearish sentiment that I've ever seen, to be honest, since 2009 and 2010. And 60% of people, based on this survey, which is very, very reliable, I would recommend look at this. 60% are bearish, just 17%, 17.7% are bullish. And whenever we hit this over 50 to 55, we are pretty close to the bottom. So we are slightly inclined to the long position now. I'm just waiting for more confirmation. Again, if you haven't seen my last video, just look at the last video, weekly analysis for the market. But we are, sentiment wise, we are getting close to the bottom. And when we hit this bullishness to over 30%, even 30% to 40%, and we are getting to another lower high in the price, that's going to be another selling signal and shorting the market. Okay. I think I wrapped up everything based on the sentiment. If you like this video, please smash the like button, subscribe to our channel, which is the least support from you folks. Have a wonderful weekend. See you on the chart. Bye-bye.